Hello, I'm going to continue with my market analysis of different assets by looking at XRP today. This one's actually going to be pretty easy, really. As you can see on this particular chart on the daily time schedule, we literally have its whole history in front of us. 4 years worth of data. And we can see throughout all the way up until 2021, it really didn't appreciate very much in value. It reached a high point around here of just under $2. But from July from about April 11th or so till about now, it's lost roughly 85% of its value. A lot of people are claiming this asset is simply dead and not worth anything. But that completely ignores 3 years of history that show that its value wasn't very appreciative to begin with. It didn't rapidly climb and accelerate to huge amounts of price action over time. It's remained relatively consistent for 3 years. Only up until the last year and a half, that it's actually had any legitimate price volatility. So with that in mind, I don't believe this asset is dead. Far from it. It looks to be quite well and alive. And it looks that it's simply correcting its value appropriate to the average of its history. The one big mistake that many people make when looking at assets like XRP is they don't look at their entire history. And that has produced a lot of stupidity on the market. Many people believe the SEC lawsuit has had a major impact on it on a global scale. I disagree. The United States is one country of 290 plus. Realistically, one country doesn't really matter in the scope and scale of a global asset. XRP's price is not set or dictated by the United States. It's dictated by a global consumer base. With or without the United States, anytime the global market decided to raise the value of XRP, as they did throughout this entire period, they could. Supply and demand. Realistically, XRP could at any moment go back to $2, or it could continue on its current path of its rough average. I personally think it's going to continue on its current path of its rough average. I don't believe it's going to be a hugely appreciable asset price-wise. I think its price is going to remain low and going to be affordable to the masses long term. That being said, though, I do think we need to be wary of any market turbulence. Luna is a good example of how things can change literally overnight, and any asset on the market can simply fall off the earth. So realistically, that is something to consider in terms of its risk assessment and risk management approach for whether or not you want to trade this asset. For the record, I aggressively trade this asset. I use a grid bot, and I use it at 1% intervals constantly. It's an infinite grid bot that will follow the market up and down no matter what, getting as much of those scalps as I can get. I believe XRP will continue to be a reliable commodity on the market. I don't believe its value is going to really skyrocket, and I don't believe its appreciative nature is going to change. But I don't believe it's going to die either. I don't think the market metrics support that kind of an assumption. I think it is where it should be, at a corrective state, balancing roughly 3 years of normalcy with unusual market turbulence. So I see it realistically as simply a commodity that is going to be around for a long time, and over the course of the next couple of years, perhaps even finding a stronger voice in general than it has had. That being said, I don't hold any currencies long term just because they're non-appreciative. I trade based upon opportunity. When that opportunity shows that I can make a reasonable profit, I enter the market. Once I have reached my reasonable profit, I exit the market. I do that with every cryptocurrency I trade based upon the merits of the market. Because one thing that I don't believe in is buy and hold. Because in the cryptocurrency market, you have no legitimate reason to hold. And if any part of this market should have taught people that, it should have been the Luna collapse. If you bought back here when the market was at its low, and you sold up here when it was at its high, you would have gotten an 85% increase in your profit. But the buy and hold means you wouldn't have sold up here. And as such, you would still be sitting here with 85% of your loss you could have had, or simply just barely above what you initially invested. That is the wrong way to look at the market. And all of the filth on the market, yes, I said it, filth, preaching buy and hold that is going to the moon and all of that stupid nonsense, is simply looking to take advantage of you because they were dumb enough to buy up here and they can't admit that they screwed up. The reality is, you buy on opportunity, you sell on opportunity, and you gain a profit. Trading is about profitability. Investing is about appreciativeness. Cryptocurrencies do not have an appreciative availability. You don't get dividends for them. There's no reason to hold on to them. They don't have a 140-year history of the stock market. Assets like AT&T, the S&P 500, Verizon, Iron Mountain, the Guggenheim Fund, or countless other time-tested, proven assets that do pay out dividends routinely. Those are appreciative, and those are something worth buying a few shares of and sticking in a safety deposit box and simply holding on to for 10 or 20 years. Cryptocurrency is not that. Buy and hold is just fool's gold. You must be smart about your trading. You must be smart about your investing. I believe the cryptocurrency market is going to be here in the future. But that does not mean I believe that this one single asset is going to be around for tomorrow, because it may not. A lot of people put their faith in Luna, and it shot up dramatically overnight to huge prices. It collapsed, it fell, it literally turned into dust. $88 million of dust for a lot of people. That's a serious consequence for an asset that doesn't have real appreciative value. And that is why that type of thinking in the crypto market only leads to losses. Get in at an opportunity, get out at an opportunity, and be happy of your profits. Don't try to chase them. Chasing profits only leads to losses. And that is where I'm going to talk now about a particular Jackrabbit recipe that does just that. Opportunity. Whether you are a 5-minute trader or a 1-hour trader, this is the right approach. Risk mitigation, risk assessment, budget analysis, and clear and well-defined opportunity. For that, I'm going to first switch to a lower time frame. Okay, here is the 5-minute, and as you can see, it is actually not bad looking. It looks like we might have entered a sideways market after a bit of price appreciation. But from here, you can see not so much a sideways market as much as maybe a slow, gentle incline. But of course, with the last several months, we've had quite a bit of turbulence from November 14th and that big, huge bear rundown. And as you can see here, you can see the prices showing some of that rundown, preceded by a range. Now this is only about the last 20 days in the market, but it's still enough to demonstrate the short-term profitability. So let's get into the actual algorithms. First, let's go to the main chart and let's turn everything on. This is a momentum algorithm, and it works on 2 different levels of momentum. Very unusual setting and usage of RSI, but it does exceptionally well with managing the market. And that's what we're going to go into in depth right now. Let's start with the RSI itself, because it is really the pinnacle point of the success behind this approach. And its settings are very different. And I do mean very different. I'm using RSI overbought and oversold set at the 50 mark. Anything above 50 technically is in an uptrend. Anything below 50 technically is in a downtrend or a bearish state, whichever way you want to perceive it. So if we look at this market, a bearish uptrend was selected here, and as you can see here it starts. We hit all of this up here, and here is signaled to end. This is not bearish, bullish. So this is a bullish uptrend, and a very nice profit within that bullish uptrend had you had rode the entire uptrend properly. So let's move to the next part of this, and let's go back in history a little. In fact, let's go up to the 1 hour. and look at this RSI, because it's actually based upon the 4-hour time frame. So as you can see here, we have this huge rundown. It starts about right here, and it just continues all the way down to about here. And if you look at the RSI at its current settings shows right here is the peak of the bullish run, starts going down. This marks the end of the bullish run. Then we start the bearish, which keeps going. We get a bit of a reprieve and a little bit of a bullish spike, but then it goes back down into bearish territory. So as you can see, this approach really does quite well. But here we have a bit of a battleground. Between the bulls and the bears, as you can see, there's a tug of war of what's commonly called whipsaw, where they're fighting it out to see who's going to get control. Is this going to be bearish or bullish? Well, it turned out in the end, the bulls won. And this became the onset of this nice little bullish curve. But as you can see, the totality of the indicator picked up a buy signal here and exited here with a simple 1% take profit. It didn't ride the whipsaw. It figured out opportunity and it capitalized and profited from that opportunity. But let's look at the RSI some more. As you can see, it starts of a bearish run and it ended the little bullish run. But here we had a slight almost got a little bit of a bullish reprieve, but then it dropped again, complete bearish, until it finally reached here when it began its bullish reprieve. So if you continue going through the market at this level, you will see that the 4-hour RSI works exceptionally well. So let's actually look at the settings to this, because that is where things really get different. Okay, I have the time frame set to 240, 4 hours. I'm using the closing price, and I'm using the RSI moving average as an SMA, a simple moving average to calculate and filter the RSI signals. Then I'm smoothing the RSI with another simple moving average. And I want the last 200 candles in my RSI calculation. So I'm taking 200 candles, running an RSI, and smoothing it. That gives me what you see on a chart. With overbought and oversold at 50, using the crossover method, I can get the best opportunities. And now comes the last part of this magic. I am inverting the signal. Normally, when you should be buying the signal because it's overbought, I'm actually selling. And normally when you should be selling because it's oversold, I'm actually buying. I'm using market metrics to leverage against the long-term trend. That's why it's set for the 4-hour time frame. So that no matter what goes on below that, the momentum of the 4-hour time frame drives the RSI itself. So that is really the big part. Now let's move to here. This is a 200 period moving average, momentum based, where anything below the green line is considered bearish. Anything above the green line is considered bullish, and I only buy when prices are above the green line or when the market is likely to be in an uptrend. I only want to look at price action when the prices are getting higher. I don't want to focus on bearish market behavior, only bullish market behavior for this momentum, which gives me overall a filtration effect for my purchases so that I can actually limit the number of purchases that take place. And let's actually see that in motion. So let's spread this out. And you'll see literally for the last 907 days in the 1 hour time frame, I made 5 completed trade cycles. And this turned out to be a one-hit wonder. Only one position per trade cycle. So as a long-term trend following process, this did exceptionally well. But now let's see what happens at the short term when it would act more as mean revision. And here we are. And you could even go down to 1 minute, which is where I like to trade. 7 trade cycles, an average of 1 position per cycle, and so far a maximum purchase of 1 per cycle. So what you're looking at is a one-hit wonder on the lower time frame as well. Now that's not always the case, and this can accumulate, but it does not accumulate a lot. Its metrics and analysis try to keep price action extremely limited, as you can see here, and also the drawdown or negative effect of price action below the average usually isn't that significant either. So let's look at this chart. Okay, as I was saying, let's look at this chart. And let's see the previous purchase. Okay, it would have been nice to write up this, but I got my 1% here. I'm happy. That's the point of what this is set to. Simple 1% profits. Get in, get out, not very much drawdown, and it actually did very well. It met my needs. Now you can go to a strategy-based approach, but that only works on higher time frames. Here's another one right before the buy signal. Another simple short run, not very much drawdown, not very much exposure. Another rather deep bearish onset before this purchase, but still not getting into it. As you can see, the market hasn't been strong enough to really generate a lot of good signals, but it's still realistically within a good point and purpose. Here is another purchase, a little bit of a drawdown, but then we get out of the market. So what happens if we actually look at a longer picture and we sell by strategy? Well, one, it means more risk, obviously. A lot more risk. But it also means more profitability. As you can see, this one only made 3 trade cycles, but it pulled in an 11% profit. That is phenomenal if you can stand the risks. And that's the point. Risk versus reward. I personally don't like this approach because it's more risk than what I want. But if you have the risk and the budget preferences, this is equally just as profitable, with an average profit of 5%. So this is both long-term and short-term in one recipe, and it does exceptionally well either way. I prefer the lower risk and the lower exposure just because that fits my trading better. I don't like being in the market any more than I have to, even though I'm sacrificing profit for the process. So here, my maximum is 7%, maybe up to 10% total for the entire trade cycles. Whereas one trade using strategy as a selling point brought in an 11% profit. So mean revision, which is what this approach is, versus trend following, which is what the sell by strategy approach is. Both work appropriate to the risks associated with them. So, from the standpoint of XRP, is it dead? Absolutely not. This is a money-making asset with the recipe, with the right budget, with the understanding of your risks and the current market. This will make money. And this is an acceptable amount of money for simply a 20-day period. Now, of course, all coins are not going to perform the same, but the point is you find the best approach for the coin you want. And this coin is one I trade frequently. I know its history, I know its metrics, and I know just how profitable it can be. So if you have a $1,000 budget, 7 trade cycles at roughly 1% profit, you're going to make roughly 7% on that budget. Of course, that is in relation to your position size. And since this is a one-hit wonder, a position size of $10 is going to be 70 cents. A position size of $100 is going to be $7. So as you can see, this can do very well. In fact, one of the best ways to use this particular approach is with a 1% of your equity so that it compounds with each and every trade. This is a good approach for this asset, and this asset is a good asset. I don't think I need to really get too aggressive into a lot of the deeper analysis because, well, quite frankly, it talks for itself. Short term or long term, it really doesn't matter. There are a lot of potential opportunities this asset offers. In fact, I'm going to switch it since we're on a longer term, I'm going to switch it to strategy based. And as you can see, long-term trend hunting, 53% profit. So this is the kind of functionality that you need to think about when you're trading. Long-term trading versus short-term trading. Long-term trend analysis versus short-term mean revision. Each has a purpose and a place appropriate to you. Let's scale down the time frame a little. Here's the 30-minute. For most people, this is kind of a happy medium. But at the 30-minute level, it has not brought in a finished trade cycle yet. And yes, that happens quite often. But we just go up to the 1 hour and we see how that trade cycle completed. The last profit was 37%. That would have been the trade cycle that was still open on a 30-minute. So that should tell you just how well this can do as a trend following technique. And you can see here that it avoided this entire down run. So this is not one for getting into the middle of the bearish systems. It does very well for staying out of the bearish markets. And as you can see, it gets out right before the whole bear market just goes right down. You can see a nice big upkick here. Could you have gotten out at any of these places if you wanted to? Yes, but it didn't, and that's fine. So long term or short term. And let's see how it would have done if we'd used the short term method. For someone like me wanting to trade. Okay, it would have made 5 trade cycles with an average of 2% profit. Now, if I was trading $100 a position, that might be worth it for the limited amount of risk that we can see the position size actually incurred. Very small position sizes. Not bad, really. Simple and easy to understand with very little moving parts. And really, this particular approach can work manually as well. That is, you could wait for it to make the buy point, then anytime in this range, after you've made the purchase, set your 2% take profit or 1% take profit, however you want, and just let it kick off on its own. So manually or automated, this just works for this asset. So market-wise, XRP is alive and well, both on just about every time frame. You will find exceptional opportunities. Now, I will link this chart into the description so you can look at it. But point blank, know this. The market is not dead. XRP has a long and favorable history ahead. Now again, there are risks. It could die just like Luna did, but I don't think it will. I think its history proves it's reliable enough to be around for at least another year. And if I'm making 7 trades every 20 days, let's just make this 7 trades a month. At the end of a year, I've made 70 trades. That's 70% profitability. That's a reasonable rough estimate for the simplicity of this asset. So as you look forward, don't believe the FUD of XRP dying. It's not dying. Don't believe the nonsense that it's going to magically go to the moon, because that's not going to happen either. But the technical analysis says you can make money on this consistently. And that is the most important part of this asset. It is a money-making asset. Let me know what you think about this asset. Leave a comment below. Like, subscribe, help me grow the channel. And if you know somebody that trades XRP that's been having problems with the market, let them know about this video, because this will help them make money. This will help anybody make money that wants to do so reliably and responsibly. Until next time.